Welcome to Looking at the Markets with David Modell. I wanted to make a series of videos for beginners because you should never be afraid to ask questions, even if they're beginner questions, because we all have to start somewhere, all right? And by the way, I'm going to tell you what a stock is today, but if you want more help putting together a trading or investing plan, or you just have questions about stocks and things like that and investing, you can always contact me. My email address is down below. It's davidmodell@gmail.com. Okay, so what is a stock? Let's start at the beginning, just define what a stock is. Well, to put it very basically, a stock or a share of stock is a small piece of a company, all right? If you think of a company as a building, then a share of stock is kind of like one brick in that building. All right. If you bought one brick out of that whole building, then you own a piece of that building. And so when you buy one share of a company's stock, then basically you're owning a small piece of that company. And most of the big companies that we've all heard of, like Apple or Amazon, Starbucks, McDonald's, Coca-Cola, and so on, offer shares of stock that people can buy, and then they can also sell them, all right? Because you own it. You can buy it, and then you can sell it. And the idea is to hopefully buy a share or more than one share. You can buy one share of a company's stock. You can buy 2 shares, 5 shares, 10, 100, 1,000 shares. Whatever you can afford to buy, you can. All right. And when you buy shares of stock in a company, the idea is that you buy the shares of stock at a certain price, and then you hope that the price goes up so that later on, if you want to sell it, you can sell it for a higher price than you bought it. And that way you can make a profit. It doesn't always happen like that. Sometimes people buy shares of a company's stock, and unfortunately, the price might go down. And then if you sell it, you'll be selling it for less than you bought it, and then you could lose money that way. All right. So be aware there is risk in the stock market. You can make money or you can lose money. So that's something to be aware of. All right. Now, as far as the price of a stock, what makes it go up or down? Well, just like with anything else that people buy and sell, the price depends on what people are willing to pay for it at any given moment. All right. So if you buy a company's shares of stock, and what the price you buy it at is going to be whatever the investors, all the investors collectively are willing to pay for it at that moment. And if you buy shares of the stock, and then later on all of the investors collectively decide that they're willing to pay more for those shares of stock, then the price can go up. And then if you want to sell your shares of stock, you can, and you can make a profit that way. On the other hand, if you buy shares of a company's stock and the investors all collectively decide that they're not willing to pay as much for the shares of that stock, then the price can go down. So it all depends on what people generally are willing to pay for those shares of stock. And that depends on a number of factors, mostly on how the company is doing or people's perception and sentiment, their feelings about how that company is doing at that moment, all right? And it's not always reasonable, it's not always rational. The stock market is definitely not rational at all times. And the stock market is where people buy and sell stocks. Now remember, you can buy stocks and you can sell them pretty much whenever you want. You can buy shares of a stock and then hold on to it or keep it for a day and then sell it. Or you can hold the shares for a week, a month, a year, 10 years, 30 years, as long as you want. Some people buy shares of stock and then hold it for their entire lives and then leave it in their will to their children and grandchildren when they pass away. That can happen. All right. So stocks have flexibility in terms of time. Now, there are exceptions. Like, for example, if you buy shares of stock of a company and that company, if it goes out of business, for example, and the stock gets delisted or taken off of the stock exchange, not able to buy and sell anymore, then you can lose your entire investment. Again, there is risk in buying stocks. All right. So unless a company goes out of business or something happens like that, something bad happens, you'll probably be able to hold on to your stock shares for as long as you want. And you can sell them or not sell them. It's entirely up to you. Now, to buy stocks or shares of stock, you have to have a broker or a brokerage account. But that's for a separate video. I'll probably make a separate video on how to buy shares of stock. But just be aware, you can't just go anywhere and buy shares of stock. You have to open up a trading or investing account at a brokerage. But that could be for a separate video. All right. So just to recap, stock shares, a stock is, or a share of stock is basically just a piece of a company. All right. And its value or its price is worth whatever all the investors collectively are willing to pay for it at that moment. And it can go up or it can go down depending on a number of factors: how the company is doing financially, how people feel about the company, what's going on in the news, how the overall stock market is doing, how the economy is doing, things like that. These can all affect the price of a share of stock. All right. So this was a basic introduction to what a stock is. I hope it's helpful to you. Once again, if you would like further help or more assistance with trading, investing, stocks, whatever, you can email me at that email address anytime. It is davidmodell@gmail.com. And if you like this video, please give it a thumbs up on YouTube and leave a comment. And please subscribe to my YouTube channel and hit that bell on YouTube so you can receive the latest updates whenever I put out more financial educational videos. Thank you so much for watching and listening, and I'll talk to you again soon.